When is the right time to sell your cryptocurrency? This question haunts every crypto trader, doesn't it? Welcome to the world of cryptocurrency trading, a place where timing is everything. It's a world full of opportunity, but also full of risks. It's a world where fortunes can be made and lost in the blink of an eye. In this high-stakes game, one thing is certain. Selling at the right time can maximize your profits, while selling at the wrong time can lead to significant losses. But how do you know when the right time is? How do you navigate this complex landscape and make decisions that will benefit you in the long run? How do you solve the timing puzzle? The answer lies in understanding the factors that influence the decision to sell crypto. To solve this timing puzzle, we need to understand the factors that influence the decision to sell crypto. So, let's dive in and explore these factors together. One of the most critical factors influencing your decision to sell is market trends. Now, let's dive into what this means. Market trends are essentially the general direction that the value of an asset, like a cryptocurrency, is moving towards. This can be upwards, downwards, or sideways. Understanding these trends can provide a roadmap for decision-making, helping you decide when might be the best time to sell. Firstly, let's talk about bullish markets. Picture a bull charging forward, horns raised. That's a bullish market for you. It's all about forward momentum. When the market is bullish, the prices are on an upward trend. This is usually a good sign for those who already own some crypto, as the value of their investment is increasing. But it's not always the best time to sell. Why? Because the trend might still be on its way up. Selling in a bullish market requires careful analysis to ensure you're not missing out on potential further gains. Now let's flip the coin and talk about bearish markets. Think of a bear swiping down. That's what prices do in a bearish market. They trend downwards. This can cause some to panic and sell their crypto abruptly. But experienced traders know that a bearish market isn't necessarily a sell signal. Sometimes it's just a market correction, a short-term downward trend before prices rise again. However, if the downward trend continues for a longer period, it might be a good time to consider selling before incurring more losses. Remember though that cryptocurrencies are volatile. Trends can change rapidly, and what was a bullish market one day can turn bearish the next. The key is to not let emotions guide your decisions. Instead, rely on careful analysis, understanding of market trends, and sound judgment. Between the bullish charge and the bearish swipe, there's also the sideways market, where prices neither rise nor fall significantly. This can be a time of uncertainty, where the decision to sell or hold becomes even more challenging. So, keeping a close eye on market trends can give you a good indication of when it might be time to sell. But remember, trends are just one piece of the puzzle. Your personal financial goals, risk tolerance, and the specific circumstances surrounding your investments should also play a crucial role in your decision-making process. Your personal financial goals should also play a big part in your decision to sell. Each trader has a unique set of financial objectives. These objectives, whether short-term or long-term, can significantly influence when you decide to sell your crypto. Let's consider a trader whose primary goal is to make quick profits. Such a trader might keep a close eye on the market fluctuations, and as soon as their cryptocurrency appreciates in value, they may decide to sell. This strategy is often referred to as day trading. On the other hand, if a trader's goal is long-term investment, they might hold on to their crypto for a longer period. They would be less concerned about daily market fluctuations, focusing more on the potential for substantial growth over the years. This approach is more akin to hodling, a term coined within the crypto community that means holding on to your investment regardless of market conditions. Remember, your financial goals should guide your trading decisions. Another important factor to consider when deciding to sell is your risk tolerance. Now, what do we mean by risk tolerance? It's essentially the degree of variability in investment returns that an individual is willing to withstand. You could think of it as your financial pain threshold. If the market takes a sudden dip, how much loss can you stomach before you feel the need to sell? Risk tolerance isn't a one-size-fits-all concept. It varies greatly from person to person, and it's influenced by a myriad of factors. Your financial situation, your investment goals, your age, and even your personality can all play a part in determining your risk tolerance. Now, how does risk tolerance impact your trading decisions, particularly when it comes to selling crypto? Well, individuals with a high risk tolerance are often the ones who hold on to their crypto assets for longer periods. They're the ones who can ride out the market's ups and downs without panic selling. Their eyes are fixed on the potential for high returns, and they're willing to weather the storm to get there. On the other hand, we have individuals with a low risk tolerance. These folks might prefer to sell their crypto sooner rather than later. They're not necessarily looking for a home run. They're more interested in preserving their capital and minimizing potential losses. They'd rather exit the market with a smaller gain than risk losing what they've invested. But here's the thing about risk tolerance. It's not something set in stone. It can change over time as your circumstances change. That's why it's important to regularly reassess your risk tolerance and adjust your trading strategy accordingly. So whether you're the type to hold on for dear life or the type to cut your losses and run, understanding your risk tolerance is key. It's about knowing how much risk you're comfortable taking on and making decisions that align with that level of comfort. Knowing your risk tolerance can help you make a sound decision about when to sell your crypto. Because at the end of the day, successful trading is as much about managing your emotions as it is about managing your investments. So when is the right time to sell your cryptocurrency? We've unpacked this intricate question in our discussion today, and while there's no definitive answer, we've identified 3 crucial factors that should guide your decision. Firstly, understanding market trends is vital. It's about observing and interpreting the ebb and flow of the crypto market and making educated decisions based on these patterns. Secondly, your personal financial goals play a significant role in determining when to sell. Are you seeking quick profits or long-term investment growth? Your goals will largely dictate your selling strategy. Lastly, your risk tolerance is a key determinant. Can you sleep at night knowing your investment's value could take a hit? If not, you might want to sell sooner rather than later. Remember, there's no one-size-fits-all answer. The right time to sell depends on these factors and ultimately on your individual circumstances and judgment.